What's going on, everyone? In this video, we're going to cover the prediction or projection for the NASDAQ 100 based on technical analysis. My name is D. Anthony. I'm the founder of Evolution Traders online trading educational community. We offer courses, live trading, strategy building, trading plan development, so forth and so forth. That link's down in the description box below. Now, what we're looking at here is a 1 hour time frame. I'm a day trader, I'm a scalper, so I don't really need to kind of zoom out 2 years ago and see what happened. I need to know what's been happening in the last week. What's been happening in the last couple of weeks? Can I form a little bit of a bias? Can I form a little bit of some structure that I can play off of? There's going to be a few things that we are going to look at on this chart. The first thing that should be pretty noticeable is these zones. Okay, so 20,944, big macro demand zone here, going off of a weekly Fibonacci, a weekly supply zone sitting at 22,326. We got awfully close. We put in highs this week, 22,222. That area is going to act as resistance. If we do break over that, we do have room to 325. So keep that on watch if and when we do get there. Now, I was playing around with some trend lines and some channels here. If I go all the way back in time here, right? If we kind of look back 3 weeks, this low that we put in at 20,727, we got a very aggressive bounce, higher low, bounce, higher low, higher low, higher low. Now we're kind of coming back down into this channel. Now, if I was to drag it from that low that we put in on a Friday 3 weeks ago and drag it all the way up to where we currently stand today on June the 19th, we have now had a double test of this trend line. We do have a little sneaky area in here where it's a little bit of a channel. So if you notice here, going back about 2.5 weeks ago, we put in a low, we bounced, higher low, and then we kind of lost that higher low, but we bounced off that same trend line. Okay, so this channel in between here and here, if price was trading in between that, I really wouldn't want to, so I'll just use my drawing tool. If price is trading in between this channel, I'm not going to do anything. This is like a no trade zone for me, right? And it gets thinner and thinner and thinner and thinner and thinner until we finally kind of close that channel here. So I don't really want to do anything inside that channel. But one thing that I do want to point out here is that we do have a previous swing low that sits here. So the market definitely has room to kind of continue down and test this, maybe creating a little bit of a double bottom going back to last week's lows. And then that also correlates with going back 2 weeks. And if you look at that, it matches up perfectly. So we already had our double bottom test here. We had our bounce. We kind of got out of this channel. And now we've kind of failed, right? So normally when you break out of a channel, especially when you spend, 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is about 2 trading weeks, especially when you spend close to 2 trading weeks inside of a channel. Anytime you break out of that channel, you'd like to see that pullback hold, right? You'd like to see that pullback hold for a continuation to the upside. That did not happen. Okay, that did not happen. We've broken out of this channel, back tested, and now we've kind of fallen back into the range here. Now, if we continue to get back in this range, well, then you could see maybe a triple test down here at the bottom of the range, and that price is going to be looking at around 21,470, 21,480 is going to be the area. Where does that kind of put us, right? So that's kind of the macro overview. Where does that kind of put us into closing the week and going into next week? So if I zoom in just a tad here and I keep that previous swing low in the picture frame here, you can see there's a purple line that's kind of going across the screen here. You guys should be able to see it, right about here. And I can highlight it for everyone. This line right here is your daily 20 SMA. So today, obviously, due to the federal holiday, markets were closed equities wise, and the futures markets were only open half day during New York. So in this particular scenario, if you kind of look where we traded down to, we traded right down into that 2-channel trend line. And we also traded down into this 20 SMA, the daily 20 SMA. So very, very significant there. I would actually look for a little bit of a dead cat bounce tomorrow. Okay, because if you look at the highs that we put in here from 22,222, here's your high, lower high, and maybe a dead cat bounce gives us another lower high for a continuation down. Now, if the market's going to push down, we're going to need to crash through that double trend line as well as our daily 20 SMA. Now, remember, I don't want to do anything if price action is inside this zone. It doesn't look like this zone is very big here, but if I was to do something like this where I go down into a smaller intraday time frame chart, well, notice here we have this, I'm going to call it a no trade zone in between 21,670 all the way down to 21,650. So this 30-point range, let's call it, I don't want to do anything in there. You see, we got in there once, we bounced. We tested it twice, we bounced. We tested it 3 times, we bounced. If we come back down into this range, I don't really want to do anything into that range. Now, we are setting up right now, but just as the market's going to be coming to a close here on half day, we are setting up a little bit of a flag pattern. Again, if this breaks down, I can see it coming back down into this range. Trading day's over for me. I only put on 1 trade today. We locked up about 125 bucks, nothing much, but I'm not going to stress trading on a day with significantly smaller volume in range expansion, just due to the fact that there's not a lot of market participants in the market today. These candles moving a lot slower, but the ranges are still very big. So for example, a normal trading day, you might have an average ATR on a 5-minute time frame between 20 and 40. And that's on a normal trading day. Right now, the ATR is currently sitting at 23 to 25 points on essentially thin air, right? On essentially hot air. So like you can get into a move here and it can spread on you 5, 6, 7 points, right? Like I don't want to be involved in that, potentially giving up more of a stop loss just due to the fact that the market's thin. So what I'm going to look at, okay, going into tomorrow, if this market opens up the overnight session today, Asian London session, if we dip below this daily 20 SMA and we get below this double trend line, if we kind of wash out and then we start to reclaim this area, so if it looks like something like this, once the market reopens here, later on tonight, if it does something like this, I will look for that dead cat bounce, and I'll kind of use those lows as a stop to see, if we're going to kind of continue on a little bit of a dead cat bounce. And let's go into a 15-minute time frame and kind of see what this looks like here. Again, our daily 20 SMA is going to be a point of interest. You can see the trend that we had from yesterday. We had a little bit of a trend line break here that absolutely washed out. But if you kind of look at this area right here, right? I think that we flip short-sighted bias if we start to close below our daily 20, right? So this would be my narrative. Let's say we close below our daily 20 and then it reattempts to remount this area, but gets kind of hung up. And if it starts to give way and take out that price point that closed below the daily 20, I want to be 100% short biased for that particular trading day, where all of my trades that I'm looking for, they're going to be short biased, right? Because I want to, any pop that we get, I want to look to short that resistance and then take it down. Any pop that we get, short that resistance and then take it back down. That's what I would be looking for to stay with the trend. Now, like I said, if we do kind of wash this area out in the Asian London session today on the 19th going into the 20th, if we kind of wash that out, and then, come time for New York Open, we're kind of just dancing around this area. And let's say off the open, we kind of have this little flash dip, but we remain over the London Asian lows, and then we reclaim that. This is going to be my opportunity to play this long, as it does have room all the way back up to 21,880, which is our next key area of supply, and that's your daily 5 and 10-day moving average. So that's how I'm going to approach the end of the week and going into next week. We're going to see how this plays out. I want to be ready on both sides of the trade. I feel that sometimes, a lot of times, traders are they're just completely long biased. We're going to just bounce and you're just looking long, and the market does something like this where it kind of traps you and you never really flip your bias. And I don't want to be too short-sighted bias, although I think we're going to go lower. I don't want to be too short-sighted bias to see something like this happen and then it just kind of rips my face off. So I want to be ready for two sides of the move, right? We're looking for a close below the daily 20 SMA, consolidation, failure to get above, and then we're looking for a confirmation of that low, or we are looking for a sweep, and then we are looking for a reclaim of that area, consolidation, and then taking out the highs, and then we want to be long. So I have two sides for this trade. I'll be ready for either side. Again, I'm a scalper, so you know, a 10 point trade here, a 15 point trade there, 10 point trade there. If I can manage to squeeze 20, 30 points out of the market each and every single day, I'm completely okay with that. We scale that across multiple prop firm accounts. By the way, guys, 80% off on Apex evaluations. If you guys need those, you can use code DAnthony. And again, if you want to join Evolution Traders, you want to trade with the team, definitely get yourself inside there. That link is down in the description box below. I'll catch all of you guys on the inside.